Welcome back to Alpha Recap, your quick after-hours look at what moved markets today. We've got a heavy one: infrastructure megadeals, a chip rotation, and a wild day in microcaps. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, yeah, great to be here. So much to unpack from the close. Let's jump in.
Quick roadmap. We'll hit the big headline, the Oracle data center campus, then the semiconductor action, the big single stock shocks like that dramatic rental car move, and then the microcap roller coaster. Wrap up with what to watch over the weekend and clear takeaways.
Sounds good. I'll flag one thing. There's a lot of liquidity and event risk themes running through today, so listeners should pay attention to volume and filings, not just percent moves.
Right. First, the top of the tape. Related Digital announced a project anchored by Oracle, about $16 billion for a data center campus in Saline Township. That is huge.
Huge. I mean, when you step back and look at this, $16 billion is the kind of project that moves supply chains: servers, networking gear, power contracts, construction crews. It's not an announcement that lives in isolation.
And the financing structure matters. Equity commitments involved funds affiliated with Blackstone, and long-dated fixed-rate debt was anchored by accounts managed by PIMCO. So, refinancing risk was dialed down on day one.
Exactly. That means the project has a higher chance of actually moving forward on schedule, which cuts execution risk. When you reduce execution risk, suppliers and regional contractors start to get priced differently. That's the chain reaction.
So what are we watching here? Leases, occupancy milestones, and supplier announcements. It's not just the headline. It's the timetable and Oracle's ongoing capital commitments that will determine where value accrues.
Right. And the other thing is, watch mid-size industrial and materials names tied to construction and power infrastructure. They often move after the lead contractor and major suppliers start showing up in filings or vendor list.
Okay, transition time. Semiconductors. This was a big tape for chip names. NVIDIA jumped about 4% on heavy volume, roughly 213 million shares traded, and Intel surged about 24% to a record close we hadn't seen since 2000.
That was a headline day. Momentum flows clearly rotated into compute and infrastructure, and a lot of that is tied back to the data center narrative. Large hyperscale builds usually mean durable demand for semiconductors and connectivity gear.
And we saw some dramatic single-stock outliers within the sector too. MaxLinear, MXL, jumped about 76% to roughly $60. Those are the kinds of moves that can get algos and options desks spinning.
Volume was the stomach test. When NVIDIA's and Intel's moves came with heavy turnover, that increased the reliability of the moves, but it also widened option premiums and short-term risk. So, what really stands out here is watching follow-through volume on Monday.
Yeah, that tracks. Momentum traders can amplify both directions, and options markets tend to reprice quickly after this kind of turnover. Keep an eye on implied volatility and option open interest.
Quick reactions only, big tech strength, big chip rotation, lots of attention on AI compute capex.
Now the other big story, single stock shocks outside of semiconductors. Avis Budget Group plunged about 48% to roughly $229.14 on heavy turnover. That was one of the biggest headline moves among household names today.
Oof, that kind of drop forces portfolio rebalancing. It raises questions about what catalyzed the repricing. Is it operational, accounting, an indictment of guidance, or something else? That's a company-specific shock, unlike the more positive labor news we saw in rail.
Right. Canadian Pacific Kansas City announced tentative collective bargaining agreements with 2 unions, which reduced strike risk and was a stabilizing event for rail revenues and freight flows. So you had one name getting repriced down dramatically, and another seeing risk removed.
Not all headline moves are equal. Labor settlements reduce near-term uncertainty for a capital-intensive operator, whereas a 48% plunge in a rental car chain looks like a repricing for company-specific risk. That tends to ripple through sector funds and rebalancing rules differently.
Short reactions only. Painful drop. Labor resolution, helpful. Market nuance matters.
Okay, now for the wildest section. Microcaps, SPAC rights, and warrants. Today's tape was littered with extreme one-day moves. Some structured securities collapsed while a handful of tiny names exploded higher.
Yeah, some headline numbers. Rights and warrants plunged. One was down over 90%, while microcaps like USGOW rallied about 380%, and several other penny names jumped 60% or more.
Honestly, I was a bit surprised by this one. These are classic low liquidity dynamics. Thin order books and concentrated flows can produce massive percentage moves that are often disconnected from fundamentals.
And with SPAC rights, warrants, and other structured instruments, you've got expirations, dilution risk, and deal timing all baked in. A single filing or notice can blow these things up or crush them.
Yeah, absolutely. Platform behavior matters too. The Polymarket Kalshi episode, the blocked account tied to high-profile wagers, shows governance and compliance issues can ripple into volatility for adjacent crypto and derivatives exposures.
Short reactions. Thin liquidity equals big moves. Watch filings. Platform actions amplify risk.
So, listeners asking what to do about these microcap swings. The practical thing is to look for confirmable catalysts. 8Ks, prospective supplements, market maker behavior. Those are the items that decide if a spike is retail-driven noise or the start of a trend.
Good point. And check volume. Some of these massive percent moves came on light volume, which raises the odds of a quick reversal, whereas others came with unusually heavy turnover that can mean forced flows or real re-rated.
Let's touch on legal and regulatory headlines quickly. There was a securities fraud class action notice against New Era Energy and Digital, which adds legal tail risk. Combine that with the SPAC and prediction market drama, and you've got a governance theme running through the tape.
Litigation and regulatory items can produce long tails of uncertainty, so watching court filings, lead plaintiff motions, and any regulator statements over the weekend will be important.
Agreed. Rapid-fire movers. Winners included a handful of microcaps and MXL. Losers were dominated by some collapsed rights and penny stocks, plus the rental car plunge. But these lists were a mix of liquidity dislocations and larger headline-driven moves.
Okay, concrete checklist for Monday when markets reopen. First, monitor filings, 8Ks, SEC notices, and any SPAC rights communication. Second, watch follow-through volume on chip names. That will confirm or question the momentum we saw.
Third, Oracle campus milestones and any partner disclosures. If suppliers or lease details appear, that turns a headline into a multi-name theme. Fourth, look for labor ratification updates on the rail story that could lock in the benefits we saw today.
Fifth, microcap liquidity. If heavy volume in names like USGOW persists, that suggests retail conviction. If it disappears, expect reversals. And finally, any platform or regulator statements on prediction markets could change risk appetite in crypto-adjacent pools.
To summarize the patterns we saw, elevated microcap volatility, a sector rotation into compute and infrastructure tied to that Oracle announcement, rising governance and legal risk, and ultimately, volume as the key discriminator.
Takeaways. 1. The Oracle-anchored data center build was the big structural headline, about $16 billion, with financing that reduces near-term refinancing risk. 2. Semiconductors rallied. NVIDIA up about 4%, Intel up about 24%, and that drew momentum flows. 3. Single stock shocks ranged from company-specific meltdowns to labor resolutions, which had opposite effects on sector risk.
4. Microcaps and structured securities were chaotic, huge percentage moves, but many on thin liquidity. And 5. Over the weekend, prioritize filings, confirmable news, and volume patterns before assuming moves will persist.
Quick legal and compliance reminder. This episode is for informational purposes only. We're not giving personalized investment advice, and nothing we discussed is a recommendation to buy, sell, or hold any security.
Right. Analysts note risks and signals. Listeners should verify filings and consult advisors before making decisions.
All right, that's our close. If you want the detailed mover lists or the filings we referenced, check the write-up at stockalpha.ai. And if you have follow-ups, head to the Q&A feature there and ask us directly.
If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with more Alpha Recap.